Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at two high growth companies that some of Wall Street's top analysts believe are a buy now. These companies continue to grow their top line in the high double digits year after year, and going forward over the next decade, massive growth is expected to come. These are two tech-based companies who have a lot of room to continue to grow and have a massive total addressable market to attack over the upcoming years. And right now, some of Wall Street's best analysts believe these are two companies to buy now and hold for the long term to get some massive capital appreciation. So in this video, we're going to break down each company, go over their current operations, take a look at their historical financials, and the future growth projections over the next 5 years. But before we can jump into stock number one, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first high growth company we're going to go over today is ticker PYPL, which is PayPal. They currently trade for $289 per share and are up by 68% on the 1-year chart. This company has a market cap at $340 billion, and they're a leader in the fintech sector, which saw some major acceleration throughout 2020 due to the pandemic in the growth of e-commerce. And if we take a look at PayPal to start 2021, they had their best Q1 in the company's history. Their Q1 numbers for this year were absolutely remarkable. And if we take a look, total revenue grew 31% year over year to over $6 billion in the quarter. They increased their total active accounts by 21% year over year. Their customer engagement was up. Their total payment volume grew 50%. 50% growth in total payment volume over 2020 is absolutely incredible. Their EPS was up 84% in Q1, and their free cash flow grew 25% year over year. So overall, to start out this calendar year, PayPal showed some incredible performance, and the growth is not expected to slow down anytime soon. And if we take a look at over the past 5 years, this company has been an absolute beast. From 2015 through 2020, their total payment volume grew more than 3x, from $288 billion to over $936 billion in 2020. Their total revenue more than doubled, from $9.2 billion all the way up to $21.5 billion, and their free cash flow saw some major growth of $1.8 billion all the way up to $5 billion in 2020. So over the historical 5 years, PayPal has seen a ton of growth. And if we take a look at the 5-year stock chart, it grew by 725%, which is absolutely insane. But going forward, the company has no plans of slowing down. And they continue to upgrade their platform with new products and services in order to increase customer engagement and to attract new users to the service. And PayPal's next generation digital wallet has done a great job of doing just that. Everything you would need from a fintech company is all within one very simple and easy to use mobile app, and PayPal remains the leader in the trusted source for all your fintech needs all throughout North America. And going forward, from their latest Investor Day presentation in 2021, the company laid out some major guidance for the next 5 years from 2020 through 2025. And they believe it's going to be a massive period of expansion for the company, and as e-commerce continues to grow, PayPal will see some record numbers. And going forward from 2020 through 2025, so 5-year projections, they predict to double their total active accounts to 750 million people, and that would be growing at a CAGR of 15%. And they expect to 3x their current payment volume to $2.8 trillion in an annualized period, which is a CAGR of 25% per year. And if we take a look at total revenue, this is where the company has set some very bold and some massive predictions. They expect to cross $50 billion in annual revenue in 2025. Currently, for the year of 2020, they generated $21.5 billion. So that means they're going to more than double it over the next 5 years, which would be absolutely incredible. And if we take a look at the numbers, they're forecasting faster revenue growth over the next 5 years than they've seen over the past 5 years. From 2015 through 2020, they grew their total top line at 18%. Going forward from 2020 through 2025, they're actually forecasting faster growth of 20% per year, which would be absolutely insane. And if PayPal comes anywhere close to achieving the $50 billion in revenue mark, I truly believe the company will be worth a lot more than the $340 billion that they're trading at right now. $50 billion of annual revenue, I do believe will lead to a lot higher share price than the $290, and I completely understand why this company is considered a long-term buy from Wall Street's top analysts. And taking a look back at the investor presentation, going forward, as the total revenue and payment volumes continue to grow, they're actually expecting to increase their earnings per share by 22% per year going forward over the next 5 years, as well as seeing an increase in their operating margin. So overall, this company is expecting some massive sustainable growth over the longer term. And over the next 5 years, in total, they're predicting $40 billion of free cash flow, which is a lot of money to fund different growth projects within the company, to buy back different stock levels each and every year, and overall gives the company enough capital to pay down all their debt and become a very strong financial beast. And if we take a look at this current point in time, the stock is considered a buy, 18 strong buys, 27 buys, and 7 holds, and no one is selling out of PayPal. 52 analysts were included in the survey, 18 strong buy, 27 buy, 7 hold. No one sells out of this company at this current point in time, which is incredibly impressive. And we can see in 5 of the past 6 quarters, they have beat analyst expectations. And the one quarter that they missed was, of course, right at the beginning of the pandemic when consumers were not spending money because we didn't know what was going on and what was going to happen to our economy. And if we take a look going forward at the annual revenue predictions, for 2021, we're forecasting $25.9 billion of total revenue, which of course is an increase of 20.6%. Then in 2022, they're forecasting 31.4%, which in total would be an increase of 46% over our current level, or around 20 to 24% per year over the next 2 years. And overall, the company's totally expected to grow by 23 to 24% per year every single year for the next 5 years, and their share price is trading below the 12-month expectation of $312, and it is considered a strong buy, coming in at a 1.8. So overall, analysts seem to really like this company. A strong buy rating, price targets well above the current level, 52 analysts surveyed, no one sells the stock right now, and PayPal is definitely a company worth taking a look at for your own portfolio, a strong player in the tech and fintech sector. And I personally believe this is a highly trusted brand within the United States, and that will allow PayPal to continue to grow very nicely over the longer term as e-commerce continues to expand. And studies have proven that when a website lets you check out with PayPal and use the secure PayPal info, then you're 15% more likely to get a sale than if PayPal was not allowed. So going forward, I think more and more companies will adopt PayPal into their ecosystem. It's been proven scientifically that the PayPal name brand relates with trust and security, and I think consumers in our highly competitive online marketplace will like having that trust when comparing different alternatives. So PayPal is definitely a company to take a look at, the first name included on this list from Wall Street top analysts to take a look at for your portfolio as a great long-term hold. And now we're going to continue on into the second high growth company we're going to go over in this episode, and it is ticker AMD, which is Advanced Micro Devices. They currently trade for $85 per share and up around 65% on the 1-year chart. This is a major player in the semiconductor industry, which is poised to see massive acceleration over the upcoming years. They currently have a market cap at $104 billion with a forward PE ratio of 39.5. And this company has absolutely exploded over the past 5 years. Their revenue has seen incredible exponential growth, and if we take a look at the share price, on the 5-year chart, they're up more than 1,600%, which is absolutely spectacular. And right now, we're sitting in a very overvalued market. Every company is pretty much trading near all-time highs, and it's getting harder and harder to find some fairly valued companies. But if we take a look at AMD, currently sitting at $85 per share, and take a look at a Morningstar report, their estimated fair value per share is at $85.68. And when the company currently trades at $85.62, they're sitting right at their estimated fair value, which is a very good sign in our highly overvalued market. So right now, if you're looking for a deal of a strong growth player, AMD may be a great option. We're expected to see massive capital appreciation going forward over the long term, and you can currently buy in right around its estimated fair value, which is a great sign. And if we take a look at the analyst report, they have a buy rating on the stock with an average price target of $116, which is absolutely phenomenal and provides a ton of upside over the shorter term from where we sit right now at $85 per share. And if we take a look at the company's investor presentation, they believe that going forward over the next few years, they have a massive addressable market, a $35 billion total addressable market in the data center sector. They have PCs and even gaming to a total of around $80 billion for them to attack year after year. And the company has a massive product portfolio that continues to grow. every single year AMD is coming out with new chips and new developments that are seeked in high demand. Their products are top-notch, they're market-leading, and this product portfolio continues to grow as the company has more focus on research and development. And if we take a look at their historical income statement, over the past 5 years, total revenue has absolutely exploded. From $4.3 billion in total revenue back in 2016 to all the way up to over $11.4 billion in the trailing 12 months. And we can see by taking a look at the chart, year after year, the total number continues to grow, which is a very good sign. And if we take a look at the bottom line, this is a nicely profitable company as well. Of course, they did lose money a few years ago, like every growth company typically does in our now market environment, but they have achieved profitability and now have generated over $2.8 billion of net income during the past 12 months, which is very nice to see. And if we take a look at the company's balance sheet, they are very, very strong and in a nice, healthy financial position. Right now, they have over $3.1 billion of cash sitting on the balance sheet, and their total current assets sit around $7.2 billion. Compare that to their short-term debt of only $2.8 billion, the company's in a great financial position with a current ratio safely above 2. And overall, if we take a look at the long-term liabilities, the total debt on the entire balance sheet is only $3.5 billion. And as we just discussed, the company has total current assets of $7.2 billion. So compare that to the total liabilities of $3.5 billion, the company's short-term assets are more than 2 times as large as the total debt for the entire company, which is very, very impressive. And taking a look at the long-term debt number, that continues to come down year after year, from around $500 million of total long-term debt down to only $313 as of the last report. So the company's doing a very good job of paying down their debt quarter after quarter. So overall, AMD is in a very strong financial position. They'll have no liquidity issues anytime soon. And going forward, I think this company will rack up a very impressive balance sheet. And if we take a look over the next year, they're predicting total revenue growth of 50% year over year with a gross margin of around 47%. So for fiscal 2021, another major expansion in the total top line. And if we take a look going forward over the medium term, so they're predicting this over the next 5 to 10 years going forward, they truly believe that they can grow their revenue at a CAGR of 20% per year while maintaining a gross margin above 50%. So overall, the total revenue, even on a longer term period, is still projected to grow at a massive rate while maintaining a nice level of profitability. In their free cash flow margin, they're predicting above 15%, will leave the company a lot of room to focus back on research and development, buy back more shares, and continue to operate the business at a high level. And if we take a look at some more analyst projections going forward, they're predicting 32% annual expansion from AMD over the next 5 years, and that's absolutely remarkable. And right now, according to Yahoo Analysts, we can see the current share price of $85 does sit below the $104 price expectation, and the company is considered a buy at this current level. So overall, definitely another company worth taking a look at for a long-term hold in a growth portfolio. AMD is a killer player in the semiconductor industry. Their growth has been absolutely remarkable over the past 5 years, and their financial statements are very, very impressive. Strong income statement and very strong balance sheet. And the company has no signs of slowing down. They're predicting continuous revenue expansion, and definitely a stock that's trading at its estimated fair value, worth taking a look at for your own portfolio, and is a strong buy from Yahoo Finance and Wall Street's top analysts. So definitely another company to take a look at. And now we're going to wrap up the video. I want to thank you for watching all the way to the end. Of course, in this episode, we took a look at PayPal and AMD, 2 high growth companies that analysts believe are buy now for the long term. So thank you for watching. Please hit that like button and subscribe if you already haven't done so, and I will see you in tomorrow's